Welcome to your weekly market update. I want to digest the massive movements that have happened within the market over the last week and a half, 2 weeks. I want to digest the consumer price index report and give you my thoughts on that. And I want to tell you a few things that's working in the market where we're seeing a ton of multiple offers. So that's what we'll go over today. So let's get into the CPI number first. Number one, we saw the markets pretty flat yesterday. CPI came out about where we expected it to. The big thing that I continue to talk about and circle the dates of May 10th, and I'll show you why in a second. But CPI is a lagging indicator, and now 43% of that is made up in shelter costs. So think home prices, think rents, think lodging, right? So that is shelter. That's 43% of the number, right? So it's a large indicator. So if you look at the swing up in rents, remember, this is such a lagging indicator that it goes all the way back to the last year. So we're talking January 2022 to January 2023. And also, if you think about it from a rental perspective, which makes up a big component of this number, leases were signed before that. So the height of shelter costs was this time last year. So we see the peak this time last year. So we would think around January to February's readings will be the peak of this number. And remember, it's a yearly average. So we should start to see this come down. Now, if you look at it in real time, we're at 7.9% year over year. That's a number that got reported yesterday. Right. So if you look back to when we dropped here in COVID, right at this point, where did it get affected in the yearly average? About a year later, right? You start to see it come down there. So it's going to take about a year, which we are now at a year from its peak. So once again, keep in mind the May 10th date. This is why. So consumer price index year over year is 5.6. It came down from 5.7 to 5.6. The markets expected that. They really wanted 5.5. So it was a little bit of a miss. You saw some stock sell off. You saw mortgage-backed securities down a little bit, which forces mortgage rates up. So here is the number of 5.6. We came in at 0.3 yesterday. That's what the markets were expecting. Remember, what the markets are expecting is what drives the prices on things. So if there's a big surprise working against us, rates are going to go up. If there's a big surprise for us, meaning inflation's coming down, rates will go down. It's really as simple as that. So the March 14th reading, this is shelter down here. This is the CPI here. Right. So we are replacing, this will come out March 14th. We're replacing February 2022. It's a big number. So we should be coming in lower than that because we came in 0.3 in shelter here. Right. So this is a big number to replace. Right. So next month should be pretty good. The one we're worried about is in March. So what I think will happen is you'll see some good movement on March 14th. The markets will like that report because it's going to pull down. If we come in at 0.3, 0.3 is going to replace this number. Shelter makes up 43% of that. So it will pull this 0.5 CPI down, which will be good. The problem will be March of 2022, right? It's 0.5, it's a little lower, and the CPI number of March 2022 is low. So this is going to probably throw off the markets. And then May 10th is where all of this should be pulling through and the yearly average should be coming down. Plus rents are leveling off or coming down anyway. So I will maintain my stance. You're going to see rates significantly go down on May 10th. Let me take you to another chart just to show you what's been happening with interest rates. So we saw swings, like one client's interest rate went from 5.75 to 6.625. From here, February 2nd until yesterday, February 15th. Remember about our lock and shop program. We can lock you in. You don't have to worry about the rate. You have a one-time opportunity to relock the rate lower. It's good for 90 days. That is meant to protect you from big swings like that. Now, a little acknowledgement of my team. This is mainly my team captain, Derek. I got to give him kudos. There were a ton of people that came in from between January 13th and February 2nd. We did not lock in their interest rates. We continue to float. We continue to float. Some of them got a 0.5% better interest rate than where they started with us. So most mortgage lenders are just going to lock in your rate. They have no knowledge of this. They don't have a finance degree. They haven't followed these markets for 20 years. Myself and my team captain, I've been following these markets for 20 years. Derek's been following them for 10 years and is arguably better at them than I am. Super, super wicked smart engineer brain. So that is his primary job, is to watch my clients' pricing and to lock them in at the best place. And he's just knocked it out of the park lately. So we're seeing interest rates on February 15th. If you look back, their highest point, let's go back a year. So we are really right now back to November 10th high of interest rates. So it's been a messy few days. I believe we'll see some recovery, but especially by that March report. Couple of things that are working on multiple offers to get the offers accepted. Our 15-day close on time guarantee. We're doing a lot of quick closings to compete with the cash offers. Appraisal gap coverage. Talk to me about that. Talk to me about how that works. And our $5,000 pre-approval guarantee. These are the things getting clients under contract. We had 8 deals over the weekend go in. We won 6 of them. Four of the agents on the other side said it was because of one of our tools. The offers were very similar. So we're seeing a very hot market. We are seeing multiple offers. We're seeing things go over list. It's not the craziness of 2020, second half of 2020 and all of 2021 and part of 2022. It's not quite back to there yet, but it is a seller's market again. So if you've been watching these every week, you'll know that my predictions that I made that the window was about 60 days seems to have happened in 30 days. So we are here to support you. We are here to run numbers for you. We are here to be different, unique, and better than our competition. 312-731-4939. If we can help you, 312-731-4939.